out with the old and in with the new. You're looking at that new X logo.
Now the company is saying bye-bye to the bird and the name Twitter, rebranding to be known simply as X.
Elon Musk has killed the Twitter brand. Brand Finance estimated Twitter's brand value at $4 billion. In this video, I'm going to share the backstory, which will help us make some sense as to why Elon Musk destroyed a $4 billion brand and replaced it with X. If you're new here, I'm Bilal and I've spent the last 10 years working in finance in Hong Kong and Singapore. On this channel, we decode the mysteries of valuation and investing. So whether you're an experienced professional or you're starting your finance journey, we've got something that will enlighten you. If you find this content helpful, don't forget to like our videos and subscribe to the channel. Now, let's dive into the thrilling backstory behind X. Let's travel back to 1999, when Musk and his brother sold their first startup called Zip2, which was an online classifieds company for $305 million. Musk received $20 million from this deal. He was just 27 years old, and with this new money, he set out to build his new startup, which he called X. The idea for X was to be a financial services super app which would allow users to manage their checking account, savings, mortgage, investments, loans, and insurance all under one place. To acquire new users, X put $20 in the wallet of each new user. Musk understood that while the CAC, or the cost to acquire each customer, is $20, the lifetime value of each customer will be much higher. On the other side of Silicon Valley was a startup called PayPal, who were giving new users $10 to sign up to PayPal. PayPal was led by Max Levchin, a Ukrainian computer scientist, and Peter Thiel, an ex-hedge fund manager. PayPal's initial idea was to make money transfers via infrared between Palm Pilots. However, Levchin and Thiel pivoted the business model to that where users could send money to each other via email, when they realized that this was the bigger market opportunity. PayPal really took off when eBay requested their servers to facilitate transactions on the site. eBay is an online auction and shopping website on which people buy and sell goods and services. PayPal helped to facilitate payments between these buyers and sellers. Despite their different goals, X and PayPal found themselves in cutthroat competition, and both further increased their sign-up offers to gain new users, thus burning a lot of cash. Both companies also struggled to monetize their user base and generate revenue. In March 2000, the dot-com bubble had burst and the market turned bearish. It's typically very difficult to raise money from investors in a bear market, and this was the case for PayPal and X. So they decided to merge. When negotiating the terms of the merger, Musk argued that X was worth 11 times more than PayPal. However, Levchin did not agree to such a deal until X and PayPal merged as equals. After the merger, Musk took over as the new CEO of the combined entity X.com Corporation. Musk made some controversial business decisions, transitioning PayPal from an open source platform to a Microsoft-centric one, which led to many technical difficulties and delayed product development. Musk also made the decision to rebrand PayPal to X-PayPal, a move that was poorly received by customers. Musk prioritized rapid growth, focusing on user acquisition over fraud prevention and regulation, which led to many other issues. Also, many company staff resigned under Musk's leadership. As a result, Peter Thiel and Max Levchin and others secretly started plotting a coup to remove Musk as CEO. The plotters, aware of the need to win a board vote against Musk, strategically waited until he was on a long flight to Australia for his delayed honeymoon. On that day, they presented their concerns to Mike Moritz, a critical board member and founder of Sequoia Capital, after which they convened an emergency board meeting. The board members were shocked to hear about the company's serious problems and Musk's dictatorship. When Musk heard about the coup, he immediately flew back to the US, but it was too late. Peter Thiel took over as the new CEO and Levchin as CTO. Musk was demoted to director and board member. He was furious and soon quit X.com. Peter Thiel pivoted the company to focus entirely on PayPal. He discontinued X.com and X's financial services, and he addressed the fraud issues. As a result, PayPal became a huge success. It was sold to eBay in 2002 for $1.5 billion. While Musk felt robbed of X as both a company and a dream, he was its largest shareholder, and he walked away with $176 million. In 2017, Musk bought X.com back from PayPal, and a few years later, in 2022, he bought Twitter for $44 billion. Was changing Twitter into X his grand plan from the beginning? Regardless, the pivot of Twitter to X is Elon Musk's attempt to revive and finally build that dream. Throughout his career, it has remained the one great idea that he feels got away. This time, he likely feels that there are no pesky investors that can stop him, and he's probably correct. I don't think Musk cares about destroying the $4 billion Twitter brand. Here's a clip of his response to an interview question about his tweets hurting his businesses.
Offer me money. Offer me power. I don't care.
So you just don't care. You want to share what you have to say.
I'll say what I want to say, and if the consequence of that is losing money, so be it.
At the time of filming this video, Musk is reported to be the richest man on earth with a net worth of $240 billion. Assuming he earns a return of $10 billion a year on that, he's making $24 billion each year. That's about $2.7 million each hour. Whether X will succeed depends on whether there is any appeal for a super app in the West. Super apps seem to have done well in Asia. After personally spending 10 years in Asia, I've used WeChat in China, Grab in Singapore, and Gojek in Indonesia, which were great apps. But my view is that there just doesn't seem to be a pressing need for a super app in the US. However, I wouldn't want to bet against Elon Musk, so time will tell. It's also interesting to note that Elon has affinity for the name X, as he named his son X-A12, he owns SolarX, and there is a Tesla Model X and now X.com. When it was publicly traded, if you tried to invest in Twitter shares based on its PE multiple, you would have seen it go on a roller coaster ride from 0 to over 200 times. The same for Amazon, its PE multiple ranged between 0 and over 3,000 times, making it seem very expensive. Yet Amazon returned over 1,000% returns. In our next video, we discussed the 3 reasons why you should never use the PE multiple when making investment decisions, and we expose a hidden driver of value that is often overlooked. The link to that video will be here or in the show notes below. You don't want to miss it.